Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to speak with small cap executives after they put out important news. With us today, you can see two executives on with us. First, Daniel Petrov, CEO of Kiaro Holdings, trades on the venture under KO. With him, Stephen Pelton, CEO of Aegis Brands, trades on the big board TSX under the stock symbol AEG, and also a new director of Kiaro. Let's talk about why. For those of you new to the story, because you saw this headline, Kiaro is one of Canada's largest retailers of cannabis. In their last full year, they've registered $17.1 million in revenue, up 230% year over year, and a gross profit of $5.1 million, up 281% year over year. But those numbers are going to get supercharged because on September 27th, Kiaro closed the acquisition of Hemisphere Cannabis from Aegis Brands, and together forecast projected annual revenue of $42.7 million for Kiaro, with gross profit of $13.7 million. Unbelievable numbers. It's an all-stock transaction. Aegis now holds 25% of Kiaro, so it's a big one. Let's talk about it. Gents, welcome to the show.
Thank you, Albert.
Thanks, George.
Stephen, first question to you, because you're the new guest, right? Dan's been on a couple of times. We've all heard from him. You sold Second Cup in April, and now you've completed this transaction with Kiaro. Who is Aegis? More importantly, why did you choose Kiaro for such an important transaction where you're basically handing over Hemisphere in return for 25% of the company?
Okay, good question there. I mean, Aegis, however you like to pronounce it, is really a food and beverage consolidator. It's where me and my team have the most amount of expertise and experience, and that's where we wanted to be. We built this brand, Hemisphere, very proud of it. But when we're getting focused on acquiring other food and beverage companies, I think the people that we're acquiring want to know that we're focused just on the food and beverage. So the deal with Kiaro and Daniel just made a lot of sense for us. We wanted to have this asset that we believe in an industry we believe in hands of the people that are thinking about cannabis 24/7. I think it's the right thing for our investors. I think it's the right thing for the brand, and I think it's the right thing for Kiaro. So we're really excited about this. You know, like I said, now we're 100% focused on the food and beverage space, with just a very little bit of my time as a director and sitting on the board of Kiaro.
And Hemisphere must have, correct me if I'm wrong, but I'm assuming you guys had your pick of the litter with Hemisphere. You could have gone to a lot of different large cannabis companies who would probably love to enter the same transaction. Anything specific about Kiaro that you guys really like that push you towards getting this deal done with Dan and his team?
Yeah, absolutely. I mean, the first and foremost reason why we like Kiaro is the team. Like, they're real cannabis and retail professionals. We also like the fact that they were in BC where we weren't. Great exposure in a market that is somewhat protected. And we also like the fact that they were in the wholesale business in Saskatchewan. So they've kind of spread out in a good way, and bringing the two companies together, it was kind of 1 + 1 = 3 for us. And I believe Kiaro felt the same way.
Dan, I'm quoting you from the press release. The closing of this transaction is monumental for Kiaro. Let's talk about how great Hemisphere is, because if you're giving up 25% of the company, we got to assume these are just fantastic assets. They obviously have the number. What is it about the assets that you really like? What is it about these locations?
So Steve's on the board now. So I'm going to dig in a little bit and just say, not to be modest, I mean, when you're looking at any transaction in M&A, and you get to the point where, you know, we're trying to acquire an asset, and then Steve and the team there is vetting us, right? You know, you're acquiring such a strong portfolio or a company when that company you're acquiring is so diligent and selective on who they're going to do the deal with. So when Steve came to me and we started talking, we started talking early or late 2020 last year.
Wow.
And then Steve was very focused. He's okay with me saying this now. Dan's on board again. Can't come down on me too hard, but it's he said, Dan, if we invest this portfolio, we will be investing it in a company we believe can be the top 3 retailer in Canada. That was hands down, and that's what Steve said
confirmed?
to me.
That's that's where your thinking was.
Certainly sounds like something I would have said. Yes. Yeah.
So Dan,
And
yeah, go ahead, keep going.
so, but that was it. When I looked at that, and again, that's why I think it took so long. We went through a long process to make this deal work. We even tabled it for a bit while they were going through the second cup deal, and we were not the only ones. If Steve, he'll keep me honest here, but we were not the only ones that they were looking at, and we went through. So this is a very much correct me if I'm wrong, Steve. This is a big choice on Aegis's part. They kind of had such a great portfolio here that they had the pick of the litter of companies they want to do business with, and I'm fortunate that we chose each other and we did the deal because the portfolio is just phenomenal. And let Steve maybe could fill in color on the locations, but these are second cup locations. These leases were acquired or acquired by a company that had hundreds of leases and still till today. As Steve can talk to the backing that they have, and even the Yogan Fruits connections, but these are premium locations, and maybe Steve can even speak to that portfolio, what they've curated here.
Yeah, Steve, let's talk about how great the portfolio is, the location, the quality of the locations, and why they're so successful.
Yeah, I will talk about that in just one second. I want to just touch on what Daniel said. From our point of view as a shareholder and a CEO of Aegis, it was easier for us to pick someone like Kiaro for a lot of reasons. We believe heavily in our asset, but also in the industry. And although we have 25% of the company, we believe the best is to come in this industry and partner with Kiaro. We want to realize value. We had other transactions that were all cash, and we chose to do this deal with Kiaro because we still believe there's
that's saying a lot.
As for the locations, I mean, Second Cup had been around for 47, is still around 46, 47 years. And our focus always for those years was to get premium locations, Main, wherever you could. It's a lot of great corners, like some of our corners at King and Bathurst in Toronto and Front and Church, like they're second to none. And so
any of us living in Ontario, I've seen many of them, and they're fantastic locations.
So we took them, and even though in some of those cases there's lots of competition around, we're exceeding all of our neighbors' sales because you're just so visible. And we're very proud of what we built with Hemisphere, and we're very aligned in the spirit of what we were trying to do with Hemisphere as with Kiaro. So, guest or customer facing service, treating your staff right, all those things are very similar in both companies. So changing the name on the door isn't going to be a drastic change inside from what the customers can experience. So I expect the Hemisphere locations to continue on their growth even after they change the names to Kiaro.
Dan, I haven't been to a location. I'm presuming you've probably been to one or two. It's not just the location, but I'm assuming it's also the quality of the experience inside, because Aegis has a track record. You mentioned Yogan Fruits. I mentioned Second Cup of providing a fantastic retail experience. I'm assuming that's the same thing with the Hemisphere.
Same thing. But I was floored to walk into locations and see the quality builds. But again, looking back, what we said, it makes sense. I mean, I didn't actually know the exact years, but 40 plus years, Second Cup's been in business. Not only these great locations, when we walk in the stores, there's very little we have to do to change the interiors. Like the experience, the quality of the builds, the layout, the vaults in the back, that you name it. It's just it's a very clean and first class experience. And like Steve said, little tweaks here and there maybe, but just to accommodate some of our tech stack. But other than that, you're kind of changing the name on the outside of the building. These are awesome stores. And anyone in Toronto, walk into one, or Ottawa, walk into another cannabis store and walk into a Hemisphere store. You'll notice the difference, and it makes it very easy for us to integrate them, right? So just beautiful stores. Yeah.
Now, together with what Kiaro had, because obviously had great performances last fiscal year, and now you're bringing Hemisphere. You guys are projecting 12-month revenue, a forecast of, let's call it 43 million. I'm just rounding up. How much of that comes from what what all the stores are doing right now versus how much of that also includes growth? You know, are you guys, I'm playing devil's advocate. Are you overestimating the growth that's coming? Or where do you come up with that number?
The 42.7 is pretty conservative. It's what Kiaro's doing now. And last year we posted the 17, but we're on a run of like 24, 20, 25 right now. And then we're adding the Hemisphere assets on. So this is a forecast from the day we closed the deal. This is a forecast for 12 months from closing. Once these things are full ramp, we expect them to be over $50 million. So that's just, and this number is, we didn't pick that number lightly. We actually had to prove it to the exchange and kind of show them, you know, even our math, and hence why you see we posted the gross on it too, right? So no, that number is again, that number was calculated with you know what I mean. So, and that's from the day we closed. The forecast is 42.7. So if that answers your question, but
yeah, no, that's you know, I want to ask that, and I'm glad you brought the part of the exchange, because it's a small cap world, and you might have George Com, you know, buy ABC widgets and say $43 million, but not really mentioning we're assuming 500% growth this year, and it's not, you know, it's not a really reliable number. And I knew it was, but I think it was important for investors to hear it. So let's talk about growth going forward, you know, after that 12 months. Specifically, Dan, you mentioned something called, I've never heard this before, second mover. You're saying second mover advantage. Kiaro's got second mover advantage in Ontario. What does that mean? Why does that play to your benefit?
Well, I think this is, I think what this deal is the second mover advantage when you look at it. Maybe Steve can speak to that, but Eleanor, you know, COO at Eleanor Lynch at Kiaro, you know, she's been in retail for what, 15 odd years. And she said, Dan, we have a saying in retail, first is worst. And I could see that in a very competitive environment where you have no barrier to entry. In retail, a lot of times there's no barrier, where it's a little different when you do have a barrier. So I talk about this lots in BC. There's significant barriers that are maintained over time. Every time you put a store through, you have to go from the province to the municipality. There's different regulations. You might have to zone the property. You might not be able to get one because it's 500, 300 meter distancing requirements. You know, that's not typical in a traditional retail sense. You don't open up a clothing store and you're like, you got distancing requirements. But this is regulated. So in BC liquor, you have a kilometer distance. You can't open a liquor store within a kilometer of another one. You can't even open them because it's a moratorium. You have to buy them now. But that's where I think second mover advantage in Ontario was key. Because what is the strategy? There is no distancing requirements. There isn't really a cap on how many stores in aggregate that Ontario can have, right? So what's the strategy? It's like I kind of related to going in and you know, playing a game. It's like, if you can, or poker, it's like, hey George, if you're gonna lay all your cards on the table real quickly and I can see what you got, it's like, why would I not come in second? You know, any kind of thing like that. So it's like second mover advantage when the chips are laid and people just rush to the plate. Hence why they're not going to get these deals and do these partnerships and relationships with a deal like Hemisphere and Aegis, right? That is a second mover advantage because they've already gone in, they've got their stores. We waited and say, we don't want the fastest stores, we want the best stores. And this deal is that
let somebody else
advantage.
Experience the pain. Let somebody else trip over themselves a little bit, you know, trying to go like the road runner. I guess it's the tortoise and the hare.
Because there was no real advantage to being in first unless early days there was lottery, and if you got in, there was supply demand, but that quickly resolved itself. So right now it's best stores, best leases, you know, and equal or better experience to stay.
Steve, you think that you know, the new Kiaro now, because it's got Hemisphere, so I'm just going to say Kiaro, the big picture now. You know, you know what you're talking about. He just knows what it's talking about when it comes to building retail brands. How confident are you that the company can, and what would it take to become a top 3 retailer of cannabis?
Yeah, so with top 3 has got to be defined. I mean, I think that Kiaro is probably the top 1 when it comes to customer service, and that's really important in the long term for retail. I mean, eventually people go where they have the best experience, and that has been a focus of Kiaro's and Hemisphere's all along. So they're at the top of that already. In the cannabis world, retail world right now, everyone's talking about the top 3 as in size of portfolio, a number of stores. I think in this world, I think there has to be more M&A. There's a lot of stores in Alberta. There's a lot of stores in Ontario, and I don't know if there's room for a lot more, but there's room for consolidation. And Daniel and his team, we've spoken about this. That's, they obviously believe in it. They bought us. I think there's going to have to be some more of that. There will be some more of that in this industry, and I think that Kiaro is well suited to participate.
And Dan, does this press release, does this announcement position you guys and put you in a much stronger position to go along and acquire Georgecom Cannabis out of Alberta and Saskatchewan with 15 locations? Because I see the quality of this acquisition, and are you going to leverage that, immediately to try and get more M&A going?
Yeah, well, I mean, Georgecom would have to be vetted through our systems, but other than that, it's already gained traction. The exposure it's given the company, we have a lot of deal. We've already looked at hundreds in Ontario, but we have a lot of deal flow coming in, not just in Ontario. This has created, again, awareness now. Kiaro is a retailer. We've made a major acquisition. We've actually done, I say 2, but we've done 3 this year, being public for 1 year. This is the big one that we've done. We're getting a lot of deal flow and inbound. We're getting a lot of investor appetite and credit. So I think a lot of things, this just fills out Kiaro as a company, our credibility, our deal flow. People know who we are. And we're actually, I know the metric right now, unfortunately, like right now we're in the state where store count, number of stores is kind of the metric by which people gauge by. And on that note, we're actually number 4 for number of stores for cannabis retailers on high tide.
I didn't realize you're already number 4 in terms of number of stores.
Already number 4. Yeah, we went above Choom with this acquisition, this deal. If you did discount the franchise stores from companies like Spirit Leaf, but it's opened up the floodgates of opportunities. People see that we're doing deals. They see that we closed the big deal. So we're on the M&A track. Institutions and investors are behind us on that front, waiting for us to do deals. So we're ready to keep going here. So we have the deal flow, we have the opportunities, and we're ready to keep going. Steve said number 1 on metrics. I mean, if you look at the fundamentals, which we're going to get there eventually in this industry, that's what we're going to be looking at. We're big enough to stand the test of time. We're in the top running group. We're going to be able to weather any storm that comes about. And there's a lot of money in cannabis. I think this industry has been around now. I've been in it for almost 8-9 years. And I think, there is some exhaustion. There is some stuff going on. And unfortunately, it is what it is. We're still in the beginning. There's a massive amount of money to make. And I think people are going to be very surprised and very happy that people that have invested in cannabis and held in as part of their portfolio for the long term, they're going to be very happy for when this industry keeps getting through these phases and keeps growing. Because you're going to see a lot of the smaller players, maybe not either anymore. You're going to see some big companies form like we are with the other few. And you're going to see cannabis companies make really good margins and really good money at the end of the day. Stephen, and a great experience, a great cannabis experience for customers.
Hey, Stephen, you're obviously representing Aegis as a board member, but that's probably all of Aegis because they want to make sure that Kiaro is, going to do things the right way and grow the right way. Would you like to see them become the Aegis of the cannabis world, which is keep building brand, keep M&A, and grow, for the next decade? Or do you think that, the greater play is get to a scale and then sell to a bigger, to a big organization 3-4 years from now?
Yeah, I mean, there's a lot of ways to answer that question. I think we really believe in Daniel and his team to make the right decision as those opportunities come out. I think that the sky is the limit. I mean, Canada is an incredibly small market compared to the many other countries that are starting to legalize. And so how big can you grow in Canada? Well, that's a little bit limited, but it's still lots of room through M&A. And then I'm excited because, Daniel's got a very wide lens when he looks at this business. He has the e-com where they're selling in Canada, US, and Australia. Yeah, not cannabis, but cannabis related products. They have the wholesale. So they've got a bunch of things going on that us to believe when we were vetting them, as Daniel said, Like these guys aren't just another retail. They are thinking big. They're looking big. They're acting big. And I believe they're going to be one of the front runners in the not so distant future. And we want to be along for the ride. We're with them. We want to support them as a member and an investor, and see where this thing can go.
Dan, last word to you. Give us a peer into your crystal ball or into your brain where you see, how do you see Kiaro position? And would you like to scale it up and then eventually exit to a bigger company, a bigger American company once nationwide exposure in Canada? Or do you have a vision where, hey, take that Canadian strength, get as strong as you can, and then start acquiring the US and growing there and be the aegis of cannabis for the next decade?
Yeah, it's a good question, George. You know what? You get asked that question a lot in business, and I've been an entrepreneur for kind of my whole life here. And it's like, you're looking to get acquired. We're looking to win. We're looking to run. We're looking to win. We're looking to do the right things. And if the opportunity comes up, we're not going to turn it down. So, and I think that's how anyone should run a business. If the opportunity comes up and you're getting good value, do it. And then, we've had a lot of interest on that side too, especially after this deal. We've had a lot inbound on that side, and it's exciting. So what are we going to do right now? We're going to flush out and fill out our Canadian portfolio. We're already doing that. The growth. I don't know if I even mentioned this on the last call, but I think we did 92% growth on our wholesale business from last year's same quarter. Our wholesale is growing huge. So we have the wholesale business. We have the e-com assets that we just acquired, like Steve said, US, Australia, and Canada. US is the big market everyone's talking about. Now we have business in the US. We are a US, operator on that platform. You're going to see us as a true multi-channel retailer now. We're going to build out all those channels, and we're going to flush out our portfolio in Canada with retail. We're going to be one of the top, if not the top, retailer in Canada, and we're going to bridge in the US. We're going to bridge in the US and those other economies that open up, and you're going to see us grow. This is where it gets really, really exciting, I think, for Kiaro. We're here. We're public for a year now. Come up on October 20th. We have the assets we need to turn the company profitable. We have all the channels we need to be a true multi-channel retailer. And we have access to the biggest market in the world, which is the US now. I mean, this is where it gets exciting, George. You watch what we're going to do over the next year or two. It's going to be huge.
I can't think of a better way to end this. We're definitely going to be watching. We're all excited. In the meantime, let's celebrate this, transaction here. Congratulations to both of you guys. It's never easy. People just think it's easy. Hey, Steve, you want to be acquired? It doesn't happen that way. Like you said, you guys have been talking for quite a while. So congratulations, get it done, getting over the finish line, and looking forward to seeing what you guys do for the foreseeable future, gents. Thanks so much.
Thanks, George.
To everybody at home, you've been watching or you've been listening to my podcast on Spotify, Google, Apple, your favorite podcast platform. To both Daniel Petrov, CEO of Kiaro Holdings, KO on the TSX Venture, and Stephen Pelton, the CEO of Aegis Brands, AEG on the TSX. For those of you new to the story, because you saw this big transaction and you want to know more, start your due diligence. Two ways to do that. First, get to the Kiaro Hub on Agoracom. Take a look at the profile page. A nice 2-minute overview gives you a good 1,000-foot overview of the company, so you know exactly what they're doing. Because as Daniel said, they've got retail. They're omni-channel. They got retail, wholesale, and e-commerce. So we got that all nicely laid out for you. And then from there, hop over to the Kiaro website, do your deep dive due diligence. Because if you believe in the future of cannabis retail, don't say we didn't tell you so. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great Agoracom small cap video.